All right, so as we all know, there is no risk-free investment in the markets, but there are investment avenues through which you can mitigate your risk. One such category of investment is Flexi-cap category in mutual funds, where an investor gets to invest across market caps and also enjoys the benefits of diversification. So let's take a closer look on one of these funds. I'm talking about PGIM Flexicap, and to talk more on the fund as well as the markets way ahead, I have Vinay Paharia CIO, PGIM India Mutual Fund. Vinay, good evening. Thank you so much for giving your time to the Money Show today. And we'll be focusing on the Flexicap Fund, but because I have you on the show today, I really want to know about the direction ahead in the market after touching an all-time high. How does it feel? And extended delay, or were you expecting around this time?
Thank you. Thank you for having me on your show, Kavita. So I think definitely it's party all over, and I'm sure you have just celebrated the party. So everyone is in a jubilant mood. Investors are making lots of money, which is good to see, and we are in the right place, right time. So I think everything looks fairly optimistic at this point of time. Having said that, we need to remember one very important aspect about investing, which is that if you are paying higher prices, which you are borrowing some returns from the future. So that is something which we need to remember at this point of time.
What are your thoughts today? You know, it's been such a long journey for the NSE from 1996, and today, you know, the Nifty is over 20,000. Tell us your thoughts, sir.
In a way, when I created Nifty in 1996 with a base of November 95, November 3 is when, on 94 is when NSE started working first time on equities, and November 395 was capped as a base for 1,000, and now it's 20,000. So 20 times returns over 27 years is a phenomenal number by any stretch of imagination, and no other country, I think, has even in dollar terms given such returns. If you add the dividends and other things, probably it would be even higher to probably 20,000, which is what we call total returns index. But ultimately, this is what we do is reflect India's progress, right? The Nifty on its own is, you can't even figure out what it is. It's made of 50 companies, the top 50 companies, and some of them go out, some of them come in. But it shows India's collective progress over last 27 years, but probably for time to come. And that's where I see India has come a long way, but India has a longer way to go. So we have still just begun our journey. We have to work much harder as a society, as individuals, to collect that wealth, create that wealth, create those jobs that is required using markets. And that's what I think slowly over so many years, 27 years, India has created a market which is trustworthy, which is fair, which is efficient, transparent, orderly, lowest cost, always available, automated, highest automation is available in Indian markets. So those are the things I think which has helped India also grow, but broadly credit to Indian industry, Indian services companies, and we are just reflecting what India has achieved over the last 27 years.
Yeah, and just after G20, it's a milestone for NSE. And so what are the next achievements we can expect from NSE? What are the next milestones we can expect?
No, each time something nice happens, we want more and more. So all of us want deal mange more, but somewhere we have to also reflect where all we have done well. The G20 is clearly an example of a tremendous leadership India has given to the world over the last one full year. And it has also shown that over 60 cities we have organized, unlike say Turkey or even Indonesia, who had one corner of one city where the entire G20 full year happened, while India did over 60 cities without any large incidents and giving such great leadership. That tells you that in a way India is also coming of age. People are accepting India's leadership, and in some ways Nifty reaching 20,000 on the next day of G20 conclusion tells you that the world now looks up to India and they are also willing to invest in India.
The market has rallied very sharply this year. What are your messages for the investors?
No,
the
saying
investor community?
yes, stay invested long term. Study well. Don't believe in tips. Don't get into derivatives if you are not experts. And if you can't study well for the companies, please go through experts like mutual funds or portfolio managers. But if you have to grow your wealth, stock markets have proved beyond doubt that they are better than any other asset class, be that gold, be that real estate, be that fixed deposits, and stay invested long term. And if India is going to grow, which I have no doubt about over the next 40, 50 years, India is going to give you much better returns in equities market than any other market.
It's a happy and wonderful moment for you, and it's a happy and wonderful moment for all of us. Congratulations. Yeah. In Hindi.
All right, so stay invested for long, and if you are someone who cannot take much risk, then via mutual fund, participate in equity, but do have equity in your portfolio. That's the word coming in from Ashish Kumar Chauhan, MD CEO NSE, and with me I have Vinay Paharia CIO PGIM Mutual Fund. So Vinay, very interesting, and something what you were also talking about earlier, Mr. Chauhan just mentioned and elaborated on the same theme. A day when the market touched its all-time high, and a day where we also saw SIP numbers coming to yet another all-time high, crossing 15,800 crores mark. So a lot of optimism. Does this also mean that market, I'm not talking about the investment numbers, but generally the market is also slightly directionless? How would you explain this?
I would just say that and differ with you that the market is right now not directionless. It is clearly zooming in one direction. There is clearly a lot of optimism. We are seeing very broad exuberance, especially in the small and mid cap space. So right since 1st of April this year, we have seen a consistent rally in the entire broader market space, which has significantly outperformed. So clearly, the markets are in a very, very optimistic mood.
Numbers coming this week from Indian markets as well as international markets, and the primary concerns would definitely emerge better once we have a clear picture in terms of numbers and data that's going to come in. Inflation data is going to come in, and we also have the export-import data, etc. But then talking about this entire euphoria, this is a clear bull territory that we are into right now. Is it also the time for an investor to either initiate something for a longer term or maybe a mid-term perspective? How do you look at it? Also, how do you look at the further trajectory of the market being led by specific sectors? Do you think it's going to be an all-sector rally, or specific sectors that would just lead this market?
So I think, Kavita, what we should do is first and foremost lengthen the horizon when we are looking at equity. And when we do that, clearly we can see that equities as an asset class can do very well, irrespective of the sectors, and many times also irrespective of the valuation, for the simple reason because equities depend on the underlying assets growth to perform. And growth, as we just heard from many of our leaders, has been very, very strong for India and is likely to remain very strong on a structural basis for the next few years. And when that happens, and when an investor has a long-term time horizon, I think clearly remaining invested in equity, irrespective of sectors, capitalization, remains a good bet. However, a very important caveat is they should not be swayed by fluctuations, because when you are investing at such valuations, there could be drawdowns in the near term, but over a medium term to long term, we remain fairly optimistic on equities.
And what specific sectors are we talking about over here?
So I think from a sectoral perspective, we remain fairly positive on financials and financial services, which means banks, NBFCs, insurance, etc. We remain positive on healthcare as a sector. we remain positive on consumer discretionary specifically as a sector. So these are very broad, big picture themes where valuations are reasonable, the underlying growth is good. And we are underweight sectors, largely industrials, which is the cap goods or infra space, purely because of valuation reasons, because there has been a very, very sharp rally in that space. So those are some of the places. We are also underweight energy as a sector. So these are two sectors where we are underweight.
Talk about your Flexi-cap fund, where a lot of large cap oriented Flexi-cap funds, we saw them tilting towards mid cap and small cap, considering the kind of rally. What's the status across market cap in your fund?
So we are Flexi-cap in true sense, which means when there is opportunities in terms of valuation in one capitalization, we move towards that. So, for example, on 1st April, we started with a higher allocation to small and mid cap relative to the peer group in the Flexi-cap fund. And as we saw valuations zoom across, the potential returns started falling in the small and mid cap space, and we started moving the fund towards large cap. So currently, we are slightly more large cap biased compared to small and mid caps on a relative basis.
Are the valuations really comfortable in large caps now? How do you look at the space as compared to mid cap, small cap run up, or is there more steam left in mid cap and small caps?
So mid caps and small caps is a very, very broad basket of stocks. And there will always be opportunities in that space. Having said that, if you look at the overall basket, clearly there are valuation concerns. And more than valuation, Kavita, I would say that the challenge in the mid cap and small cap space is the nature of the companies which are delivering very strong returns. What we have observed is that companies which have got weaker growth rates in the past and companies which have got weaker returns on equities in the past have actually done the best in the last 6 months. And that is an area of concern for us. And in fact, also an opportunity, because good quality companies which are growing fast in the small and mid cap space are available at a relatively more attractive valuation. So I think we are optimistic on high quality, high growth space in the mid cap space and small cap space. And there are many companies in the large cap space which are attractively valued, which satisfy both these conditions as well.
Going ahead, any chance of increasing your exposure in small cap specifically, because the kind of numbers that we are seeing, even the Amphi data that also shows more money has gone in the small cap space. What is your view on this?
Yeah, so our decisions are largely driven by what could be the potential return for investing in a particular stock. So we construct our portfolios bottom up. As we just discussed, the valuations in the small and mid cap space have increased substantially on a relative basis, which means opportunities are more in the large cap space at this point of time. And hence, we have moved more towards large cap. But if we are able to spot more opportunities in the small and mid cap space, definitely we will move towards that. And that is why the nature of the Flexi-cap fund helps us significantly in making such changes.
How would you explain this? The kind of run up we've seen in mid cap and small cap, and you right now look like a very large cap heavy fund, Flexi cap fund. Have your investors missed the rally that they could have seen a Flexi cap which was more tilted towards maybe mid cap or small cap?
It depends on the time horizon you look at it, Kavita, because the more narrow you look at from a time horizon perspective, the more errors will you tend to make when investing in equity. So when you look at either investing in a fund or a stock, if you look at rolling 3-year returns, you will get a much better picture. And hence, when we are investing today, we are not investing for the next 1 month, 2 months, or 6 months, or 1 year. We would always tend to look at what can happen to an underlying investment over a 3-year period. So I think over a 3-year period, I'm very, very optimistic that my investors would definitely not miss out and they would come out victorious.
Vinay, because you're a large cap heavy fund, a flexi cap fund, does it make sense for an investor to also have a pure large cap fund in the portfolio, or that's not needed because I think you've got enough exposure in large cap?
Uh, the reason why FlexiCap funds exist is to make life simple for investors. The reason they exist is to say that you invest in one fund and let the portfolio manager make the decision. When large caps are more attractive, move towards large cap. When small and mid caps are more attractive, move towards small and mid caps. And hence, the objective of an active flexi cap fund is to ensure that such changes to capitalization based investment are made seamlessly without intervention of the investor. And that's why I think this is a great category for any investor.
Right, Vinay, I think that will be all. Thank you so much for being on the show today and helping our viewers mark out their strategy going ahead in the markets. Thank you.
Thank you. Thank you. My pleasure.
On that note, we'll slip into a quick break, but then post that, let's talk about health insurance, and specifically, let's talk about the entire game of grievance redressal that we've been witnessing, or policyholders are actually going through when it comes to health insurance claims. More on this after this break. The Money Show with me, Kavita Thapliyal. Healthcare, one of the most basic requirements of one's life. Health insurance, one of the most crucial insurance that one needs to have for themselves and their family members. We have IRDAI, a regulator that makes sure that there is transparency, fairness and standardization ensured as far as fair practices are concerned of insurance companies. But why even then in a country like India, where in the first place awareness for health insurance is low, policyholders have to face rejection of claims due to invalid reasons, frauds, mis-selling, and to top it all, a failed grievance redressal system that uncovers the harsh reality of incompetence by general insurance companies. So let's discuss all of this. With me, I have very special guest. I have Bejon Mishra, founder, Patient Safety and Access. Plus, I have Mahavir Chopra, founder, Beshak.org with me. Thank you so much and good evening. Thank you for this for joining on me on the Money Show. I'll come to you first, Bejon sir, because I really want to understand how and why are health insurance companies failing as far as grievance redressal format is concerned, which is very clearly defined and explained by IRDAI.
Yeah, Kavita, you have touched a very sensitive subject today, and I want to thank you for that. You see, whenever we take any health insurance cover, we expect that when we get hospitalized or whatever we have been promised in the policy, we get that without any kind of a barrier or difficulty. In a seamless manner, we get the services. But what is happening is that most of the time there is no kind of monitoring or evaluation of this process being done in terms of the regulator, reprimanding the insurance companies who are not following the certain norms. And as you know, mis-selling is one of the largest complaint now in numbers we are receiving today as consumer groups. We receive huge complaints in terms of mis-selling, and even the complaints which reach the insurance companies, there also they find that their intermediaries are not explaining the policy in a simple, easy language. So now the regulator is coming up with a proposal.
So Bejon sir, when you say that these insurance companies are not following the pattern or the format suggested by the regulator, when you're saying that you are receiving a lot of mis-selling complaints, could you elaborate on that as to what kind of complaints and what kind of format are we talking about?
You see, what we are talking about is that when a policy is sold, most of the time the policyholder signs the dotted line without reading the fine print. So the regulator is now insisting that you please give a simple language, one-pager to the policyholder so that they know from before what they should expect and what they should not expect. That is number one. Number two, you see, what we want is that when we go for hospitalization or for OPD, it should be seamless. We exactly should know that if I have spent 100 rupees, then I would be covered for 80 rupees not 100 rupees, and I'd have to pay still 20 rupees out of pocket, even after having the insurance. Now, that kind of a mechanism is not yet in place because most of the hospitals are not empaneled with the insurance companies. And even if the hospitals are empaneled, they try avoiding giving a kind of a cashless service to the patients. Now, this is becoming a big kind of a pain for patients because at the end of the day, you don't know what is that amount you have spent and how much you will be covered by the insurance companies till the TPA or the insurance company decides what is that amount going to be paid, and then the dispute starts. So in order to avoid such disputes, it is always better that the policyholder should know much before in terms of what are their liability in terms of payment apart from the insurance cover which they have got. Now, this is what we are trying to develop now in terms of mechanism by working with the regulator, explaining them that the helpline numbers needs to be more proactive. It should be 24/7. There should be somebody who should be talking to them, not that, you just have an IVR. All these kind of facilities needs to be ramped up in India because the policyholders are not finding it very comfortable. We have 17, ombudsmen working in the country for insurance to bring resolutions to insurance complaints. Most of the consumers are not aware, even if it is written in the policy
Bejon,
in
sir,
terms of the ombudsman.
Policyholders are not aware. There is no enough awareness, and also the entire mechanism and the process is so layered and it is so complex, Mahavir, because 1/3 of the complaints which the consumer department is receiving, it is actually coming from the insurance sector. Not only that, from out of almost 5.78 lakh pending cases, around 1.61 lakh is only of insurance, okay, and your health insurance takes a major stake. So why are things so complex? We know the regulator is working towards making things simpler. We have communities and organizations of Bejon sir also who are working towards all of this, but still a lot more needs to be done. And also the stakeholders, where I clearly mean the general insurance companies, they also need to come ahead and take some responsibility towards this and just try and stop all this mis-selling and the frauds which are happening.
Right, Kavita. So it's a kind of a vicious circle that needs to be broken, Kavita. The problem lies unfortunately, with all the stakeholders. When you look at it from an insurance company point of view, the simplification of the wordings did not need a regulator to come and tell you. You could have done it on your own and could have made it very simple. There was a simplified document even earlier that IID had asked for, almost like around 8 to 10 years ago, but that gradually it has got diluted in terms of becoming again a complex document, right? The other stakeholder obviously is the intermediary. The intermediary also is in a hurry to sell and does not actually give all the details to the customer and wants to actually just book commission. A lot of them want to do that. And that also has led to a lot of trouble at the time of claim. And the most important thing people who are viewing this need to know is that one of the people to blame, and I'm saying this with a lot of, I'm being humble when I say this, is a lot of the responsibility is also of the consumer, that the consumer actually takes a lot of diligence when they are buying the policy and not be lazy about, just taking a cover. A lot of good advisors that speak to us, and we have a community of advisors who work with us, who are very diligent, who want to do good work, find it very difficult to even spend half an hour with a customer to explain them what are the basic terms and conditions of the policy, because at that time, a customer is also in a hurry to just get a policy. So in all, the problem has to be solved by everyone. As a consumer, you need to become more aware. Obviously, the industry has to make it and align it to the customer behavior and make it very, very easy, consumable for the customer to be able to understand this stuff. So it's a hand-in-hand thing that needs to be solved. Till it does not get solved, until the problem is not reached a level, the solution has not reached a level where, you could say, okay, fine, we've reached a good solution. Till then, there is no choice, but customers will have to be more aware, will have to read through documents or have a good advisor who can explain them through documents, and they will have to patiently understand this document. Unfortunately, health insurance will remain complex in India, and there are multiple reasons why it is complex. And there is a large ecosystem of hospital providers and a lot of other agents which ensure that policies cannot be simple because of multiple reasons. And one of them is basically that fraud is very prevalent in the country, and hence insurance companies are also required to put a lot of effort to ensure that they keep themselves on the safe side. So it's a round answer to this.
Right.
Basically, important from all aspects
Right.
is that while a government will have to basically definitely step in to solve for this in the long run, and I think IIDA
So-
is doing a couple of stuff like what Bejon sir said, and also stuff around making cashless available in all hospitals is also happening. I think someone just said that.
So that's going to be one step at a time, okay. But then, Bejon sir, let's just talk about a very simple thing, and which is also the right of a policy holder, the grievance redressal system. Okay, it is mentioned in the policy document, but despite that, I'm just talking about one specific issue, okay. Maximum people are facing problem over here because the details for the grievance redressal is either not right, okay, or the contact person mentioned over there doesn't exist, or there's a landline number which no one ever picks up. Just one specific issue. What is the problem in giving right information and just being active in understanding and acknowledging the problem?
You see, Kavita, let me tell you, let me give you an example of what happens overseas. When I visited the insurance ombudsman in UK, any complaint which goes to the ombudsman, the insurance company is liable to pay a fee, and it's quite a fat fee to the ombudsman for processing that complaint. Which means what? Which means that if a consumer has a complaint, that means due diligence was not done while the policy was sold. And if you're not able to give a prompt resolution and that consumer goes to the ombudsman, that means the insurance company has failed to give a proper resolution promptly to the policyholder. Now, these are the processes which has to come into India. And when we are looking for foreign investors to come in, we have to develop an ecosystem. I heard my panel member stating certain contradicting kind of a messaging. He is saying that the consumer has to be responsible. What do you mean by that? The consumer has to be responsible to what extent? That he pays the money and he is made to know that there is a cooling off period, that if he wants to come out of it, he's given enough time to come out of it. In our country, it doesn't happen. You see, if I want to come out of it, they don't allow me to come out of it. And then they unnecessarily creating disputes. So the poor consumer, that person is not that literate to understand what my co-panelist just now explained. It is the insurance company's responsibility to explain in a simple language, take a consent from that person. They don't take a consent. There is a proper process. There is an SOP for taking consent, that yes, in my full consent, I have bought this policy. They never do that. They never practice that. And then they say that they have signed the dotted line, so they are liable. What do you mean by that? You mean that you make somebody sign in court without explaining properly or mis-selling the consumer, and then you want that person to be liable? What rubbish is this? So what my contention is very simple, Kavita. We have to make the process pro-policy holder. I am not saying that the insurance company should encourage fraud, should encourage miscommunication, should encourage misinformation by the policyholder. If it is found and there is an evidence that the policyholder is giving wrong information, then that policyholder has to be made liable. But if he is innocently made a victim, then he cannot be made liable at any cost. And that is why I am saying you have to bring in transparency, you have to bring in accountability, you have to ensure that the grievance redressal system is prompt, efficient. It's not that I need help today, I'm gone to the hospital, and then when I call the call center, they say, we'll come back to you in 48 hours. What a joke it is.
Exactly.
I need help now.
Yeah.
And you're telling me you will come back after 48 hours?
Exactly. Yeah, which is what happens. Exactly, you're right. And so in this scenario, Mahavir, when can a policyholder reach out to an ombudsman?
The process is, Kavita, very simple, that you are supposed to wait for 30 days. And if you don't get a satisfactory response from the insurance company's grievance redressal mechanism, then you can basically go and apply to Ombudsman. This is restricted to basically claims worth 30 lakh of rupees. If the claim is above 30 lakhs of rupees, then you will have to basically go to the consumer court. When I gave the answer about how this problem exists, and I mentioned about the ecosystem, I don't want to take a hard view like what Mr. Bejon is taking. I think the view needs to be a little more wholesome and ecosystem friendly. I don't belong to the insurance industry. I am a player who's basically outside the industry. And I feel that every space and every stakeholder needs to be looked at and heard, and then the problem needs to be solved. Otherwise, one-sided problems are never solved.
I mean, I have a lot of questions for this particular discussion, but then one last question to you, Bejon sir. How can a policyholder reach out if in case of grievance redressal, and if it has not been addressed by the insurance company as well? What should be the way ahead? Where should he go and reach out?
See, Kavita, I'm very clear. It's not that I am not bringing all the stakeholders on the same platform. I've been wrongly quoted. Please amend. I'm not saying that. I am fully sensitive about all the stakeholders. I take all the stakeholders into equal proportion and I look at them in equal manner. It's not that I'm only pro-consumer. No, I am pro-industry also. I am pro-regulator also. I am pro-intermediary also. But if anybody is doing something wrong, then that has to be flagged. We cannot put the dirt under the carpet. Simple. Now, what I want to tell you is in simple language that the consumer must get prompt redressal. Prompt means within 24 hours, I must get some response. It is not that you keep me waiting indefinitely and here my, my family member is suffering and I have to pay out of my pocket even after paying a hefty amount in terms of getting an insurance policy. Now that is not tolerable. So we have to find a process. And that process is being looked for. Laws are being amended. We are going to very soon ensure that every policy holder should be able to call in a particular number, a particular call center, which is working 24/7 on behalf of not only all the insurance companies, on behalf of the intermediaries, on behalf of whoever is working in the insurance sector, to ensure that the data is created, evidences are created, prompt actions are taken wherever there is kind of an injustice given to the policyholder. And I am very clear in my mind, very soon you will see in the next 1 year, there will be drastic change in the health insurance sector in the country. And many people will not only opt for the insurance cover, but many people will come back with smiling faces saying that, yes, this is what we wanted to happen and this is what is going to happen. And we are going to do that by flagging the issues which are genuine, which are hard-hitting, and with solutions. We are going to do that. And we're going to do that irrespective of whether it's a patient, whether it's an insurance company, whether it's an intermediary, whether it is the regulator.
Right.
We're going to talk about everybody.
Right. And as for the regulator concern, we are also seeing the regulator taking several steps in the same direction, but then a lot more needs to be done. Well, thank you so much for being on this show and helping our viewers understand this entire concept of grievance redressal and the right way to approach it. Thank you so much. From the Money Show, we move on. India hosted the G20 summit this weekend, which saw participation by heads of state of the grouping and heads of international organization. In line with this, IDFC First Bank Presents Leaders of Tomorrow brings an exclusive interaction with Sanjeev Sanyal, Member Economic Advisory Council to the Prime Minister on significant priorities or strategic recommendation that needs to be prioritized to address global challenges and advance India's growth and development. Listen in.
And as India concludes its G20 presidency, tell me what significant priorities or strategic recommendations do you think need to be prioritized, to not just address global challenges, but to also advance India's own growth and development?
I think as the point we have made throughout our G20 presidency, and something that other countries have also agreed with, is that we need to begin to think of global governance much more seriously. And that requires rethinking many of the arrangements that had existed over the last 75, 80 years since the end of the Second World War. which was maybe suitable for a particular period in time. Many of these are now outdated. We now need to seriously relook the multilateral arrangements and various global institutions and renew them for the 21st century. So I think that is something that is important, and I think in particular the voice of the Global South needs to be taken into account when renewing these global institutional arrangements.
Tune into Leaders of Tomorrow tonight at 10:30 p.m. only on ET Now. We slip into a short break, but then post that, let's answer your mutual fund portfolio queries with Nisreen Mamaji after this break. Welcome back. You're watching The Money Show with me, Kavita Thaplyal, and I have with me Nisreen Mamaji, CFP, MoneyWorks Financial Services, to answer all your mutual fund portfolio related queries. If in case you want to send us your question, you can do that on our WhatsApp number, which is 865-797-4571. You can email us your query on themoneyshow@etnow.tv. Nisreen, good evening and welcome to The Money Show. I have our first viewer online, Shashikant from Kerala. Hi, good evening, sir. How are you doing?
Hello, good evening, ma'am. I'm fine.
Okay, I have your questions and I have the name of your funds. Canara Robeco, what fund are you talking about, Canara Robeco?
Canara Robeco small cap fund.
Small cap. You have Axis Small Cap, you have Axis Mid Cap, HDFC Defense, and you have HDFC Multi Cap. All of this have 2,000 rupee SIP. And what's the end of maturity? What's the time duration, investment horizon for you?
10 years, ma'am.
10 years. All right. Thank you. So, Nisreen, we have some more clarity. It's a small cap fund from Canara Robeco, and the investment horizon is 10 years. And approximate amount that he can accumulate in terms of corpus?
So, typically, we've assumed some rate of return.
Sure.
So, for small cap funds, I would assume about 15% CAGRs. For the mid cap funds, also the same category. For the multi-cap, say between 10 to 14. So, basically, I think that you would be, getting a corpus at the end of 10 years, ranging between 45 to 50 lakhs. Now, the historic performance for Canara Robeco, I think you are in the small cap, but in the Axis small cap, the 3-year returns are 35%. The 5-year returns are nearly 23%. The Axis mid cap has returned 3 years, 25%. 5 years, 16.5%, and 10 years, about nearly 22%. So, it's better for us to kind of value the CAGRs. But for equity funds, typically between 10 to 15% would be okay for us to forecast. But there's a disclaimer here. We need to obviously review every couple of years to see if we are on track with these funds and make minor changes to the portfolio if required.
How much did you say the approximate amount could be accumulated?
About 50, between 45 to 50 lakhs in 10 years, and the rate of 10,000 rupees, the SIPs, sure. I think 12,000, yeah.
Sure, yeah.
10,000 SIP.
10,000 SIP. Okay,
so about 2,000 in these 5 funds, yeah.
All right, so that will be the answer for you, Mr. Shashikant. We move on, and I will take Harshit's question. Nisreen? Harshit is there with me on the phone line. Harshit, hi, good evening. Thank you so much. I have your funds detail. Is there anything else you want to add? Harshit, can you hear me? Harshit, hi, good evening. Thank you so much for sending us your question. I think we have your funds detail. Is there anything you want to add more, or I can directly go to Nisreen? I'm running short on time.
No. I would just like to know the answer, and if there is any follow-up, I would ask.
Sure. Nisreen.
Yeah, so, your question is whether your portfolio is well diversified. So currently, if you're looking at about 10 years, you can increase, you have about 53% in multi-caps and 4% in small caps and 7% in mid-caps and about 9% in large caps, and your sectoral allocation is about 27%. So, sectorally, you are a little heavily skewed. you can introduce maybe like a large and mid or a flexi-cap category. And, also you can perhaps increase your mid and small cap, investment allocation a little bit, because currently you're only about 11% in mid and small combined. Having said that, you have a 57%, 53% allocation towards multi-cap, which might take care of the mid and small cap, requirements. So you are looking at, your returns will be in the range of say about 30 lakhs at the end of your time period, because for the multi-cap funds, we have kind of forecasted or, predicted that the rate of returns are a little lower than the small and mid-cap section. So, for mid-caps, we would predict, say, 15%. We forecast on the basis of 15%. But for multi-caps, we will forecast on the basis of 12 to 13%. But the portfolio is pretty decent. I've gone through the names of the funds. You're in Canada Blue Chip, Parag Flexi, Kotak Mid-Cap, Motilal Oswal Nasdaq 100 Fund of Funds, Bond Small Cap and Nippon Small Cap. So both your small caps are absolutely fine. Your mid-caps are also okay. So all in all, I think the portfolio is pretty good, the way that you have structured it, and, happy investing.
Best, Harshad, that's a thumbs up as far as your fund's name are concerned, and the required changes suggested by Nisreen, you should just go ahead. On that note, Nisreen, the time is up. I have a lot of questions, but then unfortunately we cannot be taking this further. But thank you so much for being a part of this show today, helping our viewers with their mutual fund queries. And it's a wrap on the Money Show as well, but I'm going to leave you with our WhatsApp number and email ID, because this is the only place where you get your mutual fund portfolio queries answered by our experts live. Thank you so much for watching. Goodbye.
Yes,